Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 2770th edition of Short-Term Trading Live with Oscar. Traders, thank you so much for tuning in. Your comments, your participation, fantastic. Let me show you what's going on out there. For trading, or at least for viewing markets on Wednesday, that is July 3rd, 2024, the day before a major holiday. Really, no trading should be done between now and Friday, as far as I'm concerned. But you guys will do what you'll do, so let me show you what's going on. Remember, trading is risky, risky, risky. Never trade without placing your stops, and place those stops first before you get into any positions. E-mini daily bar, ES. I mentioned in last night's video that crude was approaching an equilibrium level where if crude goes a little bit higher, it's going to reach a spot that knocks down the stock market. No crash expected, but what has to happen when crude gets too expensive is the market has to adjust for the price of crude. So an adjustment lower is what I expect if crude keeps moving higher. That was in last night's video. Now, crude and bonds, by the way, not just crude, but crude oil and bonds have been moving against what we need for E-mini S&P to continue going up. So in last night's video, I showed you that if crude continues and bonds continue, it's going to interfere. Well, luckily today, crude didn't quite reach its equilibrium level. This is the S&P chart, of course. Crude oil dropped, let me show that to you, and bonds rallied, which was really what we needed to see. So 21, crude oil, it dropped today. Nice big down day, in fact, in crude. So it didn't quite, it opened here, right? It opened and it rallied up. Let me see if I can do this for you. It rallied up, and it stopped right there on the rally. If it had gone as high as that and hit that same equilibrium spot, I think you would have seen an almost immediate reaction from the stock market. Luckily, today it actually went down, and it alleviates some of that pressure holding back the stock market. And bonds have done the same thing. We needed those to start heading back up, and bonds had an up day. T-bonds, meaning interest rates aren't steadily going up at the moment, using the price of where bonds are now and what banks charge for interest. That is determined a lot by the 30-year T-bond rate. If 30-year futures are going down like all these red bars, interest rates are going up. But when you have a nice up day, it stops the interest rates from going up and maybe hints towards them heading back down again. Now, this has nothing to do with the Fed or Jerome Powell moving rates. If 30-year T-bonds, if they go down like this, rates inherently are going up. Whether Jerome Powell speaks or not, the banks start moving the rates. And, of course, when bonds go up, banks aren't as quick to lower rates, but you know that that's the opposite of raising. So, bonds had an up day, and as we mentioned, crude had a down day that alleviated some of the pressure on the stock market, and the E-mini S&P had a nice, strong up day. And I'm going to put that in for you right now. This is today, go E-mini S&P. And it held a nice average that's been working consistently. Right? It held on to the average. So, and the bottom of this channel. So nice there. Love the fact that crude dropped. T-bonds rallied. Maybe it staves off our adjustment. But the purpose of this video is actually to show you something else. You must understand we are not out of the woods on this equilibrium move in crude oil. This is a holiday week. The stock market's going crazy. Stuff's happening. But crude has been rallying for a while. This weekly chart does not look any different than it did in last night's video. This has to turn around. This is still not good. Crude has to turn around. Otherwise, I promise you, an adjustment will be coming our way in the stock market. I am not calling crashes. I never do unless I actually see one coming. But when certain markets in certain sectors start to go against the stock market or go in ways the stock market doesn't appreciate, if they go high enough, the stock market has to adjust. So keep that in mind. Yes, we had a nice day. Crude went down. Bonds went up. Does not change this picture at all coming into next week. Let's hope we get more of crude down and more of bonds up, keeping the pressure off of Mr. Stock Market. Now, one last thing I want to remind you of. This crude oil reaching a certain level that makes the markets go down, you cannot trade that way. You cannot consider whether or not you're going to buy the S&P or not based on crude. It's only when it reaches a critical level of equilibrium, and that level changes depending upon where the other markets and sectors are. That level is in crude where I showed it to you. Don't forget, that level in crude happens to be coming in right here. I believe that is chart 21. If we go that much higher in crude, you are going to see, within a short amount of time of that happening, a price adjustment in the stock market. Hey, let's all hope for another down day in crude, another up day in bonds, and that will help alleviate that pressure. Traders, that's what I wanted to show you, just in case you're trading based on what you're seeing. Keep in mind, we're not out of the woods, but we did have a decent reaction to crude, T-bonds, and the E-mini S&P for trading on Tuesday. All right, traders, that's about it. Join me at livewithoscar.com. And remember, keep your emotions out of trading. One of the best things you can do is leave some comments below my video. I'll get back to them and let you know what I think and if I can help you. And then say this to yourselves over and over again because I know it will help. Are you with me? 1, 2, 3. Stop sore in. Emotions are rock and roll, traders. Thank you so much. Make sure you leave your comments below, like these videos, share them, and join me at livewithoscar.com.